For years, China's booming housing market has been a pillar of its economy, with many investors flocking to buy properties in major cities like Beijing and Shanghai. However, recent data leaks have revealed that the market is in serious trouble, and several empty properties and developers keep struggling to repay their debts. In today's video, we'll be discussing a major leak of data that has exposed China's housing market crisis and how it could potentially lead to the collapse of the Chinese economy. Before we begin, ensure you like this video and hit the subscribe icon. Let's go. China's economic success story has been touted for decades, with the country seen as a global leader in technological advancements and economic growth. However, recent revelations suggest that China's economic growth figures have been falsely inflated, and its economy is almost 50% smaller than initially thought. Additionally, China's technological advancement is less impressive than once thought, and its population is shrinking by over 1 million people annually. The Chinese housing market crisis started with state policies to stimulate economic growth through massive construction projects focusing primarily on apartments and cities. However, this construction was funded by insane debt levels, and Chinese property developers quickly became the most indebted in the world. They were not content with building apartments in established cities like Shanghai or Beijing. Instead, they built entire new cities and sold brand new apartments in these cities to unsuspecting investors. The problem was that no one lived in those cities and no one wanted to either. These ghost cities only made the property bubble worse. The Chinese Communist Party implemented the 3 red lines policy to limit the amount of debt a Chinese developer could have. However, even these rules were incredibly lax and reckless by Western standards. Hardly any Chinese developers could abide by them, and suddenly the debt fueling all of this growth and construction stopped instantly. Developers had no cash, couldn't take out loans to finish their projects, and couldn't even pay off their existing loans. These property companies started to collapse starting in 2001 and the months following the 3 red line policy. However, it took the legacy media almost an entire year to start reporting on this at all, and humanity's attention span is short. The Chinese housing market crisis could have devastating consequences not only for China but also for the global economy. A housing market collapse could lead to a financial crisis affecting global markets and investor confidence. It could also result in social unrest and political instability in China. Furthermore, given the country's significant role in the global supply chain, a collapse in China's economy could have ripple effects on the global economy. Many people earning 6-figure salaries in the US are now living paycheck to paycheck, and even college-educated young people with high-paying jobs struggle to pay rent and car payments. The financial storm seems to be brewing with tens of thousands of layoffs in recent weeks, and Jerome Powell actively trying to bring the labor market to a screeching halt due to stubborn inflation. Low-correlation assets such as contemporary art could be a good investment option since they have been shown to have a higher return than the S&P 500 over the last 26 years. Masterworks, a platform that allows people to invest in multi-million-dollar paintings without breaking the bank, is also a way to gain access to this asset class. According to a senior researcher at China Index Academy, as many as 30 multi-billion-dollar property developers in China have already defaulted on their debt, increasing every month. Bonds issued by these companies are worth cents on the dollar, and the prospect of investors getting their cash back is close to zero. The collapse of the property market has led to a mortgage boycott movement growing in strength and proving unavoidable for those in power. China's economy relies heavily on construction, not manufacturing, and if developers were to disappear, over 100 million jobs would be lost. The government has printed trillions of dollars to inflate the property bubble, which could eventually lead to the company's collapse. The CCP has implemented multiple stimulus packages, with each surpassing the previous to support the economy. The Chinese government recently ended its zero-COVID policy to keep the economy moving and prevent depression. While the CCP claims that house prices have only decreased by 5.5%, there is reason to doubt this figure, as trillions of dollars worth of companies have gone bankrupt, and reliable surveys show a sharp decline in new home prices over the last 2 years. The housing market has fallen by about 10% in the last 6 months, which is twice as bad as the CCP's claimed decline over the last 2 years. China's number of new home sales has fallen by 14% over the last year, and during the recent Chinese New Year week-long holiday, the number of sales was 32% lower than in previous years. Chinese real estate is the world's largest asset class, and the industry behind it makes up almost 30% of the Chinese GDP. Even a 1% decline in the industry represents losses of hundreds of billions of dollars. The market is down in the region by 10 to 12% over the last year. China may be trying to inflate itself from the bubble, but this is not a viable solution. The CCP is trying to prevent anyone from knowing the true state of the housing market, but some data is still getting out. The housing market was a boasting point for China for years and was an investment asset rivaling the West's. However, it was all an illusion, and the country will do anything to prevent people from seeing through it. And that's it for today. If you want to stay current on this topic and receive a more in-depth analysis of the situation, subscribe to this channel and give this video a like. Thanks for watching, and we'll see you in the next one.